Hello, active traders. This is Ken Calhoun, president of TradeMastery.com and Day Trading University, with our weekly breakout chart of the week for this upcoming week ahead. As always, all information is for educational use only. I'm not making any advice about what to buy, sell, or hold, and by watching this, you agree not to make actual trades. You may have seen me at the Traders Expo as a speaker. Be sure to see me coming up later this year at the Las Vegas Traders Expo coming up in November. Look forward to meeting all of you there. You may have seen me elsewhere as well. Let's take a look at our hot charts of the week. The three that I thought I would focus on first off is BP, British Petroleum. You can see this has gone all the way from 34.20 up to 36.60. What I like about it is the continuous uptrend and the recent gap, actually 3 gaps in a row. 1 gap, 2 gap, 3 gaps in a row. We always like gap continuation charts. If we take a look at the 90-day daily candlestick chart, you can see it is reaching previous resistance. What I will often do is wait until it breaks above prior resistance, which is right under 37. So I'm going to wait till it gets over 37 myself, but it's headed up and closing the bullish cut pattern here to the upside. So we'll see if this is able to continue on up. That's also a good potential way to avoid false breakouts, is to use a multi-time frame analysis. If you only use the 15-day chart, it looks great here and you may be tempted to buy right there or something. But the problem is, for a swing trade at least, it's running into overhead resistance. It's likely to attract sellers. Anyone who'd been long on this engulfing pattern down here or the moving average breakouts up here would be using this as a sell target. And so it may be choppy and may pull back and chop around up here since it's near previous resistance. So for that reason, I'd wait for it to take out new highs. But it's a great chart that's got a really good momentum and volatility. A pattern that I teach oftentimes at the Traders Expos for Money Show is what I call an acceleration ramp, where you have a steady uptrend that then gets a high volume breakout day after day after day. Especially good if you see multiple gaps in the chart. That tells you got a really strong institutional focus on buying this instrument. So we'll see if it's able to take out new highs coming up. Next chart for swing trades, we got 2 swing trade charts and 1 day trade chart. This is the second of the swing trading charts. CBI, the ticker, CBI. And it's so important when you trade to look at trading ranges. You can see this guy went from 11 to 15, so it's got a 4-point range on a $15 stock in a steady uptrend. That's good. What's not good are these pop and drop under $10 low float stocks that have minimal trading ranges, or penny stocks that zigzag up and down. Those are very treacherous. It's always good to focus your energy as a trader. At least I found in doing thousands of real money trades since the 90s is always focus on these with a nice tight channel and a clean, well-defined uptrend. And the trick is make sure that those are easy enough to find, but oftentimes they have a narrow trading range of only a point or so. That's not worth trading. You want things that also have the volatility as well as good volume and good directional trend strength. So this guy went from 11 to 15. That trading range makes it appealing for a new breakout up in new highs. If we take a look at the 90-day chart on this one, this is the 15-day. The 90-day chart, you can see we're just now starting to break north of the 50 simple moving average line, which is this red line. So oftentimes if you see, and I just noticed a bullish engulfment down here, right? So anyway, that engulfing did lead to new buyers week after week after week. We're currently at this moving average line. We'll see if it fills this region and or this region up here. But I like the consistency of the trend, and I like the fact that it just broke above. So now it's in a buy signal area if it's able to hold above the 50 simple moving average in CBI. And last but not least, for our day traders out there, here is a really good chart from today as I'm recording this live here at 11 o'clock Eastern. DVN. DVN. What I like about this, several things to like. One is the previous day's uptrend. Notice please the open range breakout length of the previous day ran the same exact length before the pullback today. Day-over-day price action patterns are the core foundation for professional day trading. We look to expect a little run like this in today's markets too, which we got. and it got followed up by buyers. After 10 o'clock, things get choppy, right? So the open range move before 10 o'clock is always the best time to trade. But anyway, it got buyers all day long for the rest of the day as well. What I like about it today is it did a minor gap and a continuation up. And not only the first leg and a pullback, but a second leg, a second run of buyers too. So now it may chop and drop, so I wouldn't be interested in it until it takes out new highs, if it does way up here. But the main point from a learning standpoint is to look for this pattern where you got a minor gap. These are my favorite patterns, or minor gaps above the previous day's high for a continuous uptrend play, and then the price projection for how to trade it. Often the answer key, the clue comes from the previous day's chart. So here it ran this far on the open. It ran the same exact length of run in today's open. And you always see these day-over-day price action patterns, which is why it makes so much sense to use a 2-day 1-minute candlestick chart. You can always zoom in using an advanced chart on the most recent price action if you're following it up minute by minute for kind of like the close-up look on a 1-minute chart. But strategically, what I found in trading these types of charts since the 90s is it's always good to start with good previous days uptrenders or gainers that then have a current day's minor gap that attracts new buyers as far as it ran in the previous day. You can use that as an initial exit target and then retrade or rebuy or scale in or position size up at new highs to build the trade. So that's a good example of a day trading chart pattern of a minor gap continuation. It's worked out especially well today for us. So whether you're a day trader with charts like that, or you are a swing trader with charts that go a little something like this, the British Petroleum chart, always be on the lookout for volume, volatility, explosive new breakouts that are continuous in context. I always like to look at charts like people. I don't trust most of them. So I only like charts that have a consistent background of a continuous move up. I mean, there's going to be a few people and a few charts I like to trust with my capital, but that's the exception rather than the rule. And so what you want is, as with people, consistency and authenticity and integrity of behavior and of price action. You want charts that, like people, do what they say they're going to do and continue to run on up in a nice, strong, high-performance breakout trend. It's not a good idea to trade squiggly line indicators, and I'm not a big fan of a lot of oscillation lagging indicators because that's kind of a guessing and gambling game. I prefer to go with more sure bets, or as close as we can get in trading to something that's closer to a sure thing with a good, strong, continuous trend that then gets excited with all these new institutional buyers on high volume that tells us something's afoot. Like Sherlock Holmes, the game's afoot, Watson. We see the breakout patterns are here. How do we capitalize on them and make bigger winning trades more often a way of life? So I hope that helps. This is Ken Calhoun coming at you from TradeMastery.com on behalf of Money Show with an exclusive video breakout chart of the week. Until next time, trade with intelligence and street smarts. Trade with real tight stops and make as much money as you can. So go get them, and I'll see you next time. Bye-bye.